Welcome, everyone. Our next speaker is Matthew Unger of iComply ICO. Welcome, Matt.
Thank you. You guys can hear me? Awesome. Alrighty. Clicker. Let's check and see if this thing works here. Yes. Awesome. All right, everybody. Thanks for coming out. I'm going to talk iComply, obviously a little bit around the area of compliance, which is, if you see the name of our presentation, has a lot to do with some of the gaps between this whole decentralized economy and some of the traditional capital markets, and also hopefully make a little bit of a case of why this is actually a good idea. Give you a little bit of a background around myself and one of the reasons why I'm here today. Years ago, way too many years ago, I was the youngest registered broker-dealer at my firm in Canada, the largest wealth management firm in the country. I was 21. 8 days in the business, the regulators came in and did a full audit of our office, and I had 0 clients, but I remember sitting in the boardroom because you have to step out of your office, they pick which files they want to go through, and I remember sitting there and thinking, why am I stressing? I can see why other people are stressing, especially after you get to know them over the years and realize some of their business practices, but why would I stress? I have 0 clients, I've never done any business period yet, 8 days into the industry. But that's kind of something that brings things back around compliance. Compliance is not just about doing something the right way. It's also about having documented procedures that say, I'm going to do it this way, and then making sure that you follow them and keeping documentation that you follow them in every case. And so this is something that in the ICO world we don't really see any of today. There's maybe some small exceptions, but even those are fairly limited. However, when we start looking at the space as a whole, there's a number of factors, and if anybody has been looking, and I'm going to reference ICOs a lot because that is our market, but if you, and there's a big difference, and maybe I'll just put a bit of a caveat. When you think of things like Bitcoin, we look at Bitcoin very different than something like a token offering to raise capital for your startup or something along those lines. If you watched the SEC CFTC hearing from last week, you heard that they refer to things like Bitcoin seem to be moving towards the commodities area. It's property, partially because nobody knows who or whom Satoshi is. I think helps with a little bit of that. But it's kind of being more and more thought of as digital gold, which is, I think, was one of the objectives, which is very exciting. But ICOs themselves are very much considered securities. And so when we look at that, then there's a couple of things. One, the offering itself. Well, if we follow this, the regulation itself is changing. The offerings themselves, how people are doing these offerings. I know quite a few of Ethereum's first investors. They had pieces of paper on a notepad that was an IOU. That was the initial SAFT, I guess, if you want to call it, on the Ethereum, which they eventually, when the network was built, they released tokens. And we see this now has evolved to a very different model today, where there is an ICO based out of Vancouver that did their pre-sale for 21 million, closed the entire thing, entirely accredited investors, a very different model. In fact, it doesn't really look much different than going public, really. And then the one thing that we don't hear a lot about right now is secondary trading, exchanges, liquidity, investor protection. And then, of course, with investor protection comes some of the issues around privacy and cybersecurity. So a little bit about that stuff. And I guess one of the other things that's really cool is we did, just if you get a bit of a sense about iComply, we did actually go live last week on the Ethereum blockchain. So we are agnostic to the blockchain. We plan to build out our protocol into multiple blockchains, but going live on Ethereum was really important and exciting for us. The announcement went live in Reuters and Bloomberg Law last week, and I'm very excited to start doing some further announcements as we start adding more features to that. So one of the things that we've seen around regulation and kind of where things came 2 years ago, I was actually doing a program out of MIT. We were focusing on cybersecurity, blockchain, quantum computing, and looking a lot into DLT in general, distributed ledger technology. And right close to the end of the program, right around the time I have to decide what is going to be my core project that I'm going to put together and present on, I start realizing, or I start watching the DAO unfold. And the interesting thing that for me, as somebody who spent 5 years running my own brokerage, 2 years working in between the head office and the broker-dealer networks at enterprise financial institutions, and seeing things like Google and Facebook doing IPOs that are valued at 8 times what my company's share price was worth. And I said, well, something's changing in the world. I need to check out this technology space. So about 8 years ago, I moved into the enterprise technology world and have been continuing to work and learn, frankly, every day, learning more, especially in this space where nobody seems to be able to sleep with a 24-hour market. But getting back to the DAO, as I was trying to think of looking at how blockchain can use and all the different ways that can be disrupted in this technology, the presentation that Tim Draper did earlier this morning talked about how financial services had this huge opportunity in it. And one of the things that people don't realize in financial services is a small amount about the actual transmission of funds and a lot about the paperwork behind it, the back office processing, et cetera. And so those 3 things that really got me somewhat excited about the DAO. The first one was how much money people were raising for this really innovative idea in a new innovative way. It was very exciting. And this ability for this collaboration, developers, investors, people getting in all these different ways, very exciting. But then the other thing that really surprised me coming from a world of capital finance was there was no due diligence, there was no investor protection, there was no documentation of how these processes were being done. And you see now with Ethereum, with EIPs and different things that are in the works, there's some really interesting stuff starting to move forward in this way, which is very exciting because we are moving towards building to a standard that the financial markets can actually start adopting this technology and that capital can actually start flowing this way. And so looking at this, one of the things and kind of my aha moment was looking and say, blockchain is an amazing way to store data. It's structured, it's easy if you understand what you're looking at or you want to be able to parse and format that into a screen. Once you've got that figured out for the Bitcoin ledger, you've got that figured out for the entire Bitcoin ledger. And the other thing that's really interesting is the immutability. And I know that's a big buzzword, but in the compliance space, you need to make sure you keep your records. And I was really surprised. How come nobody's using this just to document your compliance? So that was my whole thesis. And that's kind of the idea I came out with. And then you go into the ICO world, and everybody goes, compliance? Are you kidding me? These aren't securities. These are tokens. They're totally different. Kind of a little bit of, see you later. I just kept working, continued to build relationships and connections, and then July 25th happened. That's the way I refer to it, where the SEC said the DAO was a security. These can be securities. And for us, that created a very unique opportunity where we can continue to have a conversation about the utilities, but now that these are actually considered securities, we can actually apply securities legislation to them. And we look at that from the perspective of if TurboTax can do the Income Tax Act, why can't we do the Securities Act? And so most of the people here are probably quite familiar with this, but just a high-level recap, a month after the announcement about the DAO, there was a company in Vancouver, which is where we are from, that was sanctioned. There's been a number of other sanctions since then. We saw China, we saw Russia coming out with different regulations. Japan has taken a different stance, and so we see this shift. If anyone wants to look at this more, we originally called it a white paper. We've changed the name to a research paper. But we have a research paper on our website that looks at regulations globally around ICOs and some of the shifting patterns that we're seeing. And so this is a little bit of the Coles notes. But one of the big things that we really saw was how the SEC has started to take a much more definitive stance. And last week in the hearing, there was a fairly pointed question, and the congressman said, imagine if I have extra hard drive space on my computer and I tokenize that and be able to trade it. And for me, the first ICO that came to mind is one of the largest out there, and I immediately was like, oh, okay, yeah, like I'd looked at that from the perspective of you're sharing software. Seems like that could probably end up being utility. I'm very curious to hear how Jay Clayton answers this question. And he goes, to me, that would be considered a security, which was surprising to us because it's one of these things where, well, it's my hard drive space, but you have to actually think about what the token is doing, and it's turning that into a fungible, batchable asset that can be freely traded. So I can understand that perspective, even though I do hope that we do move into a world where not everything is a security token. The truth is that right now, if you want to access investors out of the U.S., or if you want to issue out of the U.S., same thing with Canada, you're going to need to start paying attention to securities regulations. So where this market has gone, I'm sure people have seen all sorts of research on this, but the amount of growth that we've seen in this space has been exponential. And the research that we've started to do in looking at different blockchains, we focused a lot on Ethereum. But one of the interesting things that I see over and over again is there's two different pieces here. On one side of the coin, proverbially, there's the tech world, if you will, and there's a misunderstanding of a lot of just basic financial terminology. And then you go to the finance world, and there's a complete lack of understanding maybe the implications as well as the use cases or even the viability of using this technology in different scenarios. So there's a massive need for education on both sides. And one of the things that I always find very interesting is people referring to ICOs as an asset class. It's not an asset class, at least in our opinion. It's a financial instrument. It's a corporate development tool. You want to raise capital. If you need to raise capital in your idea, whether you're pre-selling software or whether you're selling it against a cap table, you're using this as an instrument for raising funds. And so that actually is, again, something that we look at much more as an opportunity, because the opportunity that you have when you look at this and say, okay, well, how much does it cost to go public in the US? And according to a report from, I believe it was Perkins Coie, it was about $4 million to go public, ballpark, and about $1 million a year in compliance. I guarantee you that we're nowhere near that. And then you start looking at something like a private round or an OTC round, and you're still talking millions of dollars. Now, if any of the people in this room have issued an ICO and you've talked to some of the major law firms, you may have paid up to $600,000 for an opinion letter, is what we've heard of from certain firms in the US, to say that we think this is a utility. It's an interesting case where you don't really have a lot of money now, so let's help you cash up, and there might be some issues to solve in the future, but now you have funds to pay for that. And I think that this is probably a lot of the reason why we see regulators starting to talk about the fiduciary agents, the lawyers, the accountants, the assurance firms that are allowing things to happen where the issuers are not necessarily really understanding what they're getting into, and they're being given maybe not even real advice. And so I think it is something that we really have to start looking at to understand that if the regulators are going this way, and there's a big difference between freely tradable and free. As an example, I hear a lot of people who kind of hate on Bitcoin a little bit, and they're like, it's not free, it costs money. And it's like, an open source is totally different than free. And so when we're looking at something like the ICO space, and we say, okay, well, they are being considered securities. And we can look at the token scenario and we can kind of say, okay, well, I don't want to get into the security, so we're going to do a utility token, and this is access to our network. Is the network built yet? One of the interesting scenarios that I hear all the time is air miles. Well, air miles is a token, and it's a great example, actually. It is a token, but I've never heard of an initial air miles offering. And so, air miles didn't fund up their network. They created the network, and then they released this rewards points. So whether or not there is utility regulations coming down the pipe or new security exemptions for ICOs is hopefully something I really hope, and I think most of the people at this conference will hope that this is something that will happen. But the truth is that this is where we are today. As of this was in November, And as of last week, we saw it again. So we can either try to run over to Gibraltar and Singapore and Grand Cayman, or we can say, okay, well, if that's the rules, we can program those. And that's really what our focus has been. And then the other thing that's been very interesting for us, we did a demo for some of the advisors to SEC, FINRA, the White House this week after we launched our product, and talked to them about how regulators can actually use this. And there's blockchain analysis tools, blockchain forensic tools that are out there that are in use today by the NSA, the FBI, CSIS in Canada, which is our CIA, that are in there to assess money laundering. Most people don't realize that approximately 80% of the Bitcoin ledger is associated to identities. So this idea of, not being able to, if I put it on Bitcoin, no one will know who I am, is not really true. The whole concept behind this was immutability, transparency, some sort of accountability with this ledger. And this is our perspective with this type of technology, that we can use this in a way where we can do things that the traditional capital markets could never dream of. And I'll give you an example of box trading. Box trading is where I might create an account, have a couple buddies create an account, and we throw a couple $1 billion into a certain capital pool or share offering, and we trade that money between us to ramp up the volume. This is something that we see happening a lot in the pump and dump scenario with ICOs. Happens a lot in the capital markets and on stock exchanges, et cetera, today. But it's months of research and digging to try to figure out how to do it, or that it's happening from a regulatory perspective. Because blockchain is trading in real time and you can do this, we can actually put layers on top of this to say, let's see this in real time. So when we're looking at something and saying, okay, well, this technology is amazing. You look at something like Bitcoin and we're going to use these ledgers to document things, but we could also end up in a scenario where, if you've seen, I think shitcoin.me is probably one of my favorites, where there's some parodies on some of these coins that are out there where people are tokenizing. I'm still waiting for tokenization of sliced bread. But the really interesting piece is that we have a lot of these, this ability for people to just create these assets, but how do we know that there's any real value behind these assets? And if we want to see some adoption and we want to see some growth, we're going to need to start looking at that from the scenario of, if we're onboarding assets onto the blockchain, it's important that if they're going to be traded around the world for the future of global economics and the future of decentralized finance, that these actually have some real world value, or we do create a bubble. And I'm not going to get into whether or not, where we're at in the trading cycle on some of these coins or on the market as a whole. I think there's a massive amount of growth, and I've got a very interesting quote at the end of this that I think speaks to how far we see this going over just the next 2 years. But I want to talk about that whole concept. We saw that slide before. It said 3.5 billion. We've got I don't know what the market cap of cryptocurrencies is today, because it changes every few hours. But let's say we're at the $500 billion mark right now. We're talking about $160 trillion over here as one capital pool. I heard a presentation earlier this morning talking about $86 trillion in cash. And this is in securities, right? Debt and equity. So investments in companies, investments in debt instruments, most of them with companies. And we have an opportunity to tap into markets like this, or we have an opportunity to create coins that may or may not really have real world value. So our perspective has been, there are a lot of use cases. One of the things that our protocol has done, and give people a little bit of an understanding of where we fit in the stack, if you will. There's a lot of platforms out there. Indiegogo is a good example of this one in the crowdfunding space. It's an interface or a platform level. They have users that are there. They have the interface for doing your issuance of an equity crowdfund. And then you can go into another layer where you see people doing KYC tokens and different things. So they're down at the smart contract layer. One of the providers that's getting into this KYC and AML over smart contracts, we did some economic assessment on what would this cost for a trade. And it was very interesting that we were looking at over $100 for a transaction just to do some of the compliance functions in the way that they were doing it. So we really looked at this to say, if we want this to be done in a way that can be accessible, we need to be able to offer something better that's hopefully at a better price that can really reshape where this market's going. And so we focused on the protocol layer, and a compliance ledger, if you want to visualize it, runs alongside a blockchain as a documentation of compliance procedures that have happened every single time a trade is made on the ledger. And that's how we focus on getting secondary trading. So when you're talking about secondary trading, what do you need to have done if you want to access markets like this? Things like KYC, things like AML. The idea of, if I issue a token and this gentleman over here buys it in my crowd sale and he's a accredited investor, and I said only accredited investors, and he buys it, and then I make my token tradable, and he takes it, throws it on exchange, and he bought a whole bunch, and so the rest of you in the room buy it. If one of you buys my token and you haven't gone through that approval, my entire offering is illegal, according to, at least according to the US and many jurisdictions in Europe as well. Canada, we look at kind of the US Securities Act as our like rich uncle, and so we just kind of, if you see states adding layers around the Securities Act, that's very similar to in Canada, our provinces have addition, but we have a private round in our company that's closing at the end of this month, and all of our subscription agreements reference the US Securities Act. So Canada and the US was very simple for us to do as far as two countries. But then getting into Europe and different and Asia, Australia, those markets are a very different space. But we are focused on global compliance. And one of the important things is when you say, okay, well, the offering is illegal the second that you get into a secondary trading, if you don't ensure that you have those compliance steps done, the very interesting thing is that that legislation isn't about where you issue from. It doesn't matter if you go to Gibraltar. It doesn't matter if you go to Grand Cayman or Singapore. What matters is where the investor is. Where the investor is domiciled, where they're based, are they a US citizen? You have to work within the US securities regulation. So the concept of accessing this market, we have to shift a little bit of our thinking from what we've seen with some of these things. But I've seen certain projects and have been asked to provide commentary on some of the different legal and pieces around like responses to the SAFT and different pieces like this. And one of the things that I saw in one piece of document, one document that was published, they just talked about, it was a response to the SAFT, and I didn't want to put my name on it because I really felt like there's a lot of amazing things and the people behind that report are absolutely brilliant. But one of the things that I really found with there is it only talked about the risks of being a security. Well, what about the opportunities of being a security? And that was really, from our perspective, we said, well, no, there is risk, but there's also risk for me to issue shares for investors in my company as well. So we manage those risks, and that is actually what we are hiring lawyers and different fiduciary agents to help us with these roles. So there are definitely use cases for utility tokens. In Canada, one of the projects that I was able to provide some advice on earlier last year, to my knowledge, is the first token in the world to have a letter from a North American securities regulator that said they are not a security. That was CryptoKitties, which, if that turns into a security, I don't know what our world's getting into. But we get into a scenario with the offering itself, and there's a whole bunch of different disclosures, and this is what I was talking about, that interface layer, this compliant offering, making sure you have your documentations. If you're doing a token into the US or out of the US, you're going to need to look at Reg D, Reg A, Reg A+. Our goal overall is eventually to be able to get to the point of publicly listed so that somebody could use a token for as a publicly traded mechanism. But right now, there's a lot of steps, and there are things that are legislated into the process, like transfer agents and clearinghouses. Blockchain, that's the exact function of blockchain. So until some of these legislated pieces change, we're kind of going to have to operate within a lot of these exemptions. But there's a lot of very exciting exemptions that provide some interesting opportunities. If anyone is looking at this space, I would suggest, if you have seen what the Reg A Plus rulemaking is getting close to the end, that's a very interesting one. Another one I wrote a Medium article about a while ago was co-ops. And there's a carve-out directly in the Securities Act for cooperatives. And if you're a part of, if you've ever dealt with a co-op or a credit union, you're going to realize that you have to buy access into their network to access their products and services. I'm getting a note on time here, so I'm going to breeze through very quickly a couple pieces. But around what it looks like with a compliant offering, this is a bit of a workflow that we've mapped out to say it actually is going to look quite similar to doing an offering memorandum, private placement, or anything where you have audited financial statements, except we're adding in this whole concept of smart contract auditing for cybersecurity. So within what we're doing as far as tools, one of the things that we really focused on was giving the issuer the ability to actually vet some of the offering and have some compliance scores associated with the funds coming in, so they can make a decision based on the funds that are coming in and the factors of compliance, or take it a step deeper and actually get into blockchain forensics, where they can see individually what are the concerns specifically associated with this wallet. Why would we do this? A utility token is a perfect example. AirSwap, this is their own analysis, and they came out with this and said, well, a week after we didn't want too many people buying up and owning too much of our network, but a week later we saw this amount of consolidation happen into wallets from one investor. So the whole concept around secondary trading is something that we've really focused on, and again, for sake of time here, the idea behind secondary trading is, if in order for us to reach a publicly traded market, these are things that we're going to have to start programming in, and we're looking for people who want to work with us, platforms that want to issue security tokens, law firms, et cetera, that want to work in this space. I do want to skip through very quickly here to the last slide, which just talks about where this market is going. This was a statement from the hearing. We're talking about a $19.5 billion increase in 22 months, or trillion, pardon me, wrong. There's a T involved. But this is where even regulators are talking about where this market is going or could go. And so there's a lot of room for opportunity if we do it right. And if anyone wants to talk to us, we do have a booth in the back here, and we're also doing another presentation on Sunday, a little bit of a different focus, but we'd be happy to talk to anybody as well.
Thank you, Matthew. Matthew Unger with iComply IC.
I'm sure it happens.